So guys, let me share my screen. Let me know if you all can see my screen.
Yes, I can see.
Yes.
Here we have Treasury and Risk Management. Then Bank Communication Management and in-house cash. Okay. So basically our focus will be in two modules, guys, Treasury and Risk Management and BCM, wherein you will get the complete end-to-end understanding, and in-house cash also, like you will get the complete understanding of this module and configuration steps. But as a FSCM consultant, you need to first take a call, like in which module you would like to work. So normally the demand, if you look at in overall market, then treasury and risk management, BCM is in demand. Yet, so guys, in the treasury and risk management, these are the different, device, or you can say like these are the different process of treasury ZaranTech has proposed, like treasury process into integration with modules, business partner, transaction manager, then parallel ledger accounting, correspondence. So these are the course contained in the treasury and risk management theory and processes. Then on the customization, so about the, if you look at the content, then it's a configuration of the treasury and risk management, then configuration of money market, foreign exchange, then setup of deal correspondence customization. So these are the content they have proposed. And if we look at the bank communication management, then here we have the bank communication management overview. Then how does it work, like payment medium workbench, the configuration steps of the BCM into in configuration steps, and in-house cache. So if you look at the content of in-house cache, then it's about how does in-house cache process works, overall master data setup, organization structure setup. Then most important, like here cache receipt, cache pooling, all this, cross bank. So like how does end-to-end in-house cache module works? What is the actual integration with cash management, treasury, configuration steps? So these are the, if you look at the overall content of the course, you all are aware about the SAP FSCM modules. Are you aware about this module? What are the sub modules are there in FSCM? Because like 2 sessions I had taken on the FSCM introduction, but here I can see we have 3-4 more participants. So just let me quickly cover this and then we can start that. Okay, so overall, like if you see here, like why FSCM module, that is very, very important. So in SAP, if you want to learn any module or any solution, you need to understand why. If you know the objective of any module, like why it has been introduced in SAP, then definitely you can learn that. So FSCM is financial supply chain management, and like in overall, from from the supply chain perspective, so the logistic supply chain. So here you can see here, like from the supplier to manufacturer, retailer, and then final consumer. So here, if we have a very robust supply chain management, then the supplier to consumer, the supply of many material or product, you can say that will be smooth or on time. It doesn't take much time. So like if you see the online OTT platform where you order any product, and you can see like it will tell you if the product will reach out to you within a day or within 2 days, and between these 2 days, what happens from supplier if it is getting manufactured, then all the activities are happen in such a way and that the from supplier to the end customer, it reaches on time. Means there is no lag of time. Likewise, in the financial chain management, the main objective is wherever there is a requirement of fund, money, the supply should happen on time. Suppose if we need money, so money can come from my customer or money can come from from bank as a borrowing. So if we know how much money we would need or at what time, we can arrange that and we will get the money on time. But on what basis? Basis would be what are the informations are available in SAP system, what are the informations are available in the ERP system, which are going to support me to take that decision. So that's why the objective of FSCM module is to optimize process of order to cash cycle. This is the main objective. It means like where, how much money, when required. If I have a robust FSCM process, system will tell you, and it will automate your end-to-end accounting reporting of MIS. Okay, that is the objective. If I talk about overall modules, then we have cash and liquidity management module. So in this module, we normally manage the overall bank position and liquidity forecast. So if I say bank position, then if by implementing this module, you would be able to know on a given point of time what is the balance in your particular bank account or at the house bank, or you can say location, company code, or overall your group level. So that is the visibility this module will give you. Second point is getting the short term liquidity. So that's the benefit of implementing FSCM, cash and liquidity management. Then credit management, so because like if you are working on SAP finance controlling module, then like whenever there is a sale to a customer, so normally we would like to manage the credit of a customer. So we normally say yes, for a particular customer we would like to give this much of credit limit. By implementing this module, you would be able to manage the credit of a customer. You would be able to understand and get the real-time MIS, what is the overall exposure of credit in the market. So that's the objective of credit management. Then we have a collection management. So in the collection management, this module will support you in collecting the money receivables from customers. You may say like, what kind of benefit we will get? So friends, when my billing happens to customer, in the finance module, we get the report of receivables with due date. Like, okay, this customer has 10 open items and this is the due date based on the payment term. Like system will derive the due date and you would be able to get, okay, this invoice is due on this particular date, and you can get the report of receivables basis the due date. That's the benefit you get from the finance module. But this is not the end of the case. Normally what happens, like when we say collection management, if you look at the any company, they set up a very unique or very dedicated collection team who normally connect with the customer. They build a relationship with the customers, and they will keep on asking like, okay sir, this is the invoice is due, when you are going to pay. And then customer may tell you like, yes, I'm able to pay this particular invoice on this particular date. That is called the promise to pay. So if customer communicate back to you, yes, this particular invoice I'm going to pay on this particular date. So all this information you can record in the collection management. So this is the benefit of implementing collection management, wherein you would be able to update the promise to pay, like when actually customer is going to pay you, Also, the communication, like when you call a customer, what kind of conversation has happened, all those details you would be able to maintain in this module. So as a MIS, you will have the very kind of reasonable or optimum visibility on the receivables. So whatever finance module will give you information, in this module you will have the more realistic information. Then we have dispute management. So dispute management helps to manage the disputes. It means like if customer or vendors having some dispute, like they are not happy with the quality of the product, rate of the product, quantity of the product, they can raise dispute, which you can manage by implementing this model. So once like in the real life scenario, when customer raise a dispute, you manage the dispute by escalating to the respective department. You get the decision from the department head, or you will get the overall approval, like what is the kind of result of the dispute. So maybe like your manager would say, okay, this dispute looks genuine, so you would be able to give some credit to the customer. Or sometime it happens like you know it's a only kind of query query which customer has raised, which you can resolve just by discussing with the customer. So all those end-to-end functionality of managing dispute, and as a result, if you have agreed for the you know um, credit note, debit note, if as a part of the dispute you want to kind of take a decision of bad debts, so all those possibilities are there in the dispute management. Okay, then in-house case, this is the, you can say, like it is a module wherein we consolidate the receipt and payment process globally. So this module will not help you if you have operation only within a country, because this module is very much important if you have a global operation. Means in all the different country, you have banks, and you want to centralize all the banks. Means suppose like if you take example, like in India we have banking operation with ICICI, HDFC, Axis, SBI. In US you have Citibank, okay, American bank. Likewise, the country wise, if you have different bank, but managing all these banks are not so easy. If management decide to do the banking only with one bank and centralized bank of banking, okay, then you can implement this in house case, which will help you to optimize your banking operation. Then we have Treasury and Risk Management module, wherein we manage the overall investment and borrowings. So investment and borrowing, you can take any kind of investment product. So like maybe fixed deposit, maybe investment in securities, bonds. Then if I talk about the borrowings, then borrowing can be from banks, from the NBFC, from different corporate houses, or intercompany borrowing, bonds, any kind of. You take the example, and here you have the solution. Okay. So this is about the introduction of another three modules which are part of my FSCM, that is dispute, in-house cash, treasury and risk management. Then we have other module called the SAP Biller Direct. So this module help you to reach out to the your vendors and customers. So here you will extend the access of your SAP system to your customers and vendors, so that they can directly log in to your SAP portal. They would be able to see their real-time balances. They would be able to manage their master data. And if you are sharing bank uh, payment advice or some account statement, they would be able to download from their portal. Okay, so that's the benefit of Biller Direct. And then bank communication management. This module helps to optimize the overall approval of the payment. So normally what happens if you don't have this module and you are managing the payment through F Finance F110, then normally what happens like you generate do the payment processing through F110, then you generate the payment file and you share with the your bank. So in this overall process, when you generate the payment file, upload in the banking portal, the finally you do the approval of payment in the bank. So suppose you take example wherein you are managing with 10, 20, 50 banks. So the person who is authorized to approve the payment, he has to log in the system and do all those approvals in different banks. So that is also a challenge. So that's why in bank communication management, the approval process, like generating the batch depends on the approval matrix, creating the workflow for the payment approval, adding the digital signature, and finally, once the payment has been approved from the competent authority, and finally sending the payment file to the bank, wherein the payment file will be uploaded in the bank portal and your account will be debited and at the same time. So there will be no approval requirement in the banking portal once again. So that's the benefit of implementing bank communication management. So these are the 8 modules which are part of my FSCM. Now I'll quickly tell you about the in the treasury and risk management, which are the different products are covered, and then we can start. Okay. So in the SAP Treasury and Risk Management, you can see here these are the different products are part of the overall solution of SAP Treasury and Risk Management. So here we manage the investment and borrowing, and also like hedge accounting if applicable to the company, that is also possible. So in the money market, so these are the you can say product category or groups you can say, where SAP has grouped the products based on their nature. So money market, securities, foreign exchange, commodities, and derivatives. Money market, here fixed deposit, deposit at notice, commercial paper, interest rate instrument, cash flow transactions, and facilities. Okay, so these are the different type of product are covered under the money market. Then if I come to the security, then stock means your shares, preference share, mutual fund, then investment certificate. So suppose if you have investment in some certificate, what we can say, um, normally the government in India, RBI issue investment certificate, you can say bonds or NAC, some type of government tell you like this is the 5 years in investment bond. So those investment bonds, then convertible bonds, warrants, so whatever type of products you have which are traded in the security exchange, so all are covered here. Then foreign exchange, it covers about the purchase and sale in different currencies. So suppose like you buy and sell currency, so that you can manage in the foreign exchange. So here the buy and sell can be a spot transaction, means suppose if you are buying selling using the current rate, that is called the spot. But at the same time sitting I can buy currency in future date, and I can agree on the rate in future at what rate I'm going to buy or sell that currency. For example, like date is 20 date is 27 and I want 27 December rate for for the USD and INR. Okay. So if you look at the spot rate, so spot rate may be 73 rupees for 1 USD. 27th December may be rate, if you ask the bank what would be the forward rate for USD and INR. So they may tell you like, okay, my forward rate depends on the demand and supply of the currency. They would say like, yes, the rate will be 74. So $1 rate will be 74. So now sitting, you have agreed like USD particular bank, the buy or sale of this USD and INR will be 74. When 27 December will come, maybe like the rate of actual rate may be below 74 or it will above 74. At that particular date, you may take a decision whether you want to, execute this transaction. Do you want to sell or take the delivery of the, currency? Depends like whether it is a profitable for you or, loss. So depends on that, you take a decision. But like here, the end-to-end transaction management, that is called the forward exchange transaction, it will be managed in the system. Then there is a currency swap, USD commodity. So the way we do the purchase and sale of different securities like shares, mutual fund. Likewise, there is a different exchange for the trading of the commodities. So commodities, it can be any metal product, while or any food grain product. So anything can be traded in the commodity exchange. So related to that, that is come under the commodities. And then derivatives. So derivative products where the actual delivery of the product doesn't happen, only the difference between the rate that transaction happens. So that's the high level I can say. So in this product, like we have the futures, options, swaps, or different type of products are available. But like here condition is all these derivative transactions may are traded in the stock exchange, but it should be legal, it should not be illegal products. So all the derivative products are well traded by bank or exchange for a stock exchange. So these are the product types which are covered under our treasury and risk management module. Okay, now how does this overall transaction happens? Let me tell you. So in the treasury model, the transaction are related to money market, foreign exchange securities. It is managed by three different departments or sub department within treasury. So here we call it front office, middle office, and back office. So front office means the person who is actually does the dealing with the bank. So for example, if I take example of my fixed deposit, if I'm the person who is responsible for doing all kind of conversation or negotiation with the bank to do the investment in fixed deposit, it means like I'm the person who is the front office person, and once I have agreed, I'll create the transaction in SAP. Then the transaction will go to the next level for the approval process, checking all the informations are correct or not correct, and what are the reporting requirements are applicable to this product. All those information has been updated correctly in the system or not. And once like the validation will be done by the a senior manager, that is called the can say middle office person, it will get approved. And once it has been approved, now your accounting and reporting will be managed by back office team. So normally back office team means it's a account department. So overall in the treasury function, we have the treasury department and accounts and reporting department. So back office normally managed by the accounting and reporting department. Okay. Then if we talk about the integration of the treasury model, so we have talked about different products. So here you can see money market, foreign exchange, we have already discussed. But how it is integrated with other modules, how end to end, um, it will analysis or integration reporting happens using this treasury model. So here you can see like it is integrated with my cash management and liquidity planning module. So here the automatically the transaction which wherever it is relevant for the cash and liquidity management, the information will flow to the respective module. Then we have different the analyzer in treasury module, like we call it credit risk analyzer, market risk analyzer, hedge management, portfolio analyzer. So all these are integrated. So based on the information available in this module, the different kind of analyzer
It will
analysis or where control of the transaction happens. Okay.
will
Then we have the reporting. So overall reporting happens on the treasury module.
it
And
will
you can implement BIBW
it will
or different SAC report for the getting the overall MIS of the your treasury module. Okay, so this is the overall understanding, very high level. So I'm going to talk about why treasury and risk management module is required. So this why is very, very important in our SAP. If you understand the business requirement,
it will
if you understand the reporting requirement, then doing the configuration in SAP is not a challenge. Okay, you would be able to do it with the help of your colleagues, from getting the support or information from Google or SAP website, from anywhere. Like you can get the
it will
support and you can manage the configuration and setup in the system. But like this, why? Understanding the business requirement, business process is very, very important. So now here I'm saying why treasury and risk management. Okay. Means I have finance and controlling module. Still I why I need a treasury and risk management module. Okay. So now my question to you guys, if I have a fixed deposit,
it will
if I have a fixed deposit with different banks, can you tell me, like, as a
it will it will
finance head or CFO of the department, what is the information you would expect from managing the fixed deposit in your SAP or any ERP system? So normally, as a manager, what are the information you expect? What are the details you would expect
it will
about the fixed deposit from your system? Can you tell me?
So we need to know which bank it is and the start date, the maturity amount, and the interest that the bank is offering.
Interest, right? Excellent. And what are the other information?
I probably would want to know, say, on my receivables, how much money sitting in the bank that I haven't cleared in my
Yes.
system.
Yeah.
Same thing for the payables too.
And what about the accounting? Right.
Yes, accounting of the fixed deposit. Yes.
Yeah.
it will
Now
it
I
will
have suppose implemented SAP finance module.
it will
You take an example. So suppose I have a fixed deposit with you know uh, so just here I have updated. These are the information we expect from any of the RP or SAP system. Wherever we maintain the treasury, fixed deposit details. Okay. So I expect, like, I should have the detail bank wise. What is the fixed deposit start date, in date, what is the maturity amount, what is the interest rate, what is the receivables, means when, how much money I'm going to get from the fixed deposit, and overall accounting. So if I say accounting, means here you have accounting of your interest accrued, right? So every month what is the interest is getting accrued. Then what if bank is giving you credit quarterly of your fixed deposit, then quarterly interest, interest, and overall accounting of your fixed deposit maturity. So this kind of accounting we expect from the system. Now, if I have a finance module, I'm saying if I have a finance module, then what are the information you can capture? What are the process you can automate in the finance module? So let's give a try. So I'm taking the example of two fixed deposits. So suppose I have a fixed deposit with Citibank and I have a fixed deposit with suppose HDFC Bank. So here my start date. So let me put in this way, because this understanding is important. Once you understand like what is the limitations are there in my finance module, which are the information I won't be able to automate, for that I have to dependent on the Excel or some other tool, then you can understand. Okay, so you take example. So here my bank is Citibank and HDFC. Okay, now here I have a fixed deposit. So suppose I have a start date is 1st January 2021, and this I have done 10th October 2021. Maturity date, this I have, for example, 31st 12 2025, and here this is, you can say, 31st 03 2023. What is the FD amount? So here let me add this FD amount. So suppose this is for 1 million. Okay, and you can say this is for 2 million. And maturity for it, I'm just saying like, okay, based on the what is the rate of interest, if I say 5% and 6%, and this is for 4 years. So I'll just let me, this is not the correct amount, but yes, for example, I'm taking this. So this is the overall my interest, and here the receivables will be, this is my interest and this is my maturity. Okay. Sounds just a minute. 0104 2021. So I'll say this is for the 2 years. So this is the maturity amount, and obviously like accounting will say. So now, you all have worked on the finance module. So tell me like how you manage this fixed deposit in finance. What are the options you have? How would you manage? Like, are you going to create a vendor, bank-wise vendor account to manage this fixed deposit, or you will manage with only GL account? So here you have option like you can create bank as a vendor, or you can say like you will create bank-wise GL account. Okay. So vendor and then reconciliation account, you would say like you will create your vendor as bank, and you will say GL account. You can say like you will say fixed deposit with Citibank, and here you will say fixed deposit with HDFC, right? So this is the two way, like you can create a vendor or you can directly create the GL account. But when you tell me, like in this system, like the transaction code, you can use FB60 or FB50, but like would you be able to update or get all this information updated in SAP system? How you will manage? So suppose if I've created fixed deposit with Citibank, now I'm doing a transaction. Okay. So suppose if I'm doing the FB60 or sorry, FB50 or FB60 transaction to record the fixed deposit in finance. So what are the information where you will update? Can you tell me? Would you be able to record all these details in finance module? The start date, where you will maintain the start date? Can you tell me? Any
Maybe there'll be a document date or post date.
appreciate. So here you will say, I'll use my posting date, document date to update my start date. Very good.
Hey, you know, ZaranTech now offers SAP corporate training. That's right. Train your workforce in SAP with our comprehensive program. We offer customized courses, certified trainers, and hands-on labs for both individuals and businesses. Our standout features: bespoke training, fully configured servers for practice, in-house materials, and a dedicated LMS. Plus, get session recordings and 24/7 support. From functional to technical modules, we have got it all. Choose ZaranTech for SAP training and watch your team excel. Learn, upskill, succeed with ZaranTech.
I do agree. Like I can use this posting date or document date to maintain the start. What about the end date? Can I maintain this? Would you be able to maintain? So, like
Due date or something.
yes. So even said due date or value date, somewhere you would be able to maintain this information. FD amount, this is the amount you can maintain. What about the rate of interest? And would you how you will maintain the rate of interest?
That's the tricky part. I don't think you can, because yeah,
Somehow like you can say, okay, I activate interest calculation, okay, interest calculation which we do for GL, but it is not the actual what bank will give you. So you can just say, okay, I would be able to activate, but it will not be correct, because here if you have, now I'm taking the example Citibank one fixed deposit, may possibly you will 100 fixed deposit with Citibank wherein I have different rate of interest, so this we won't be able to maintain. Okay, not available. Then how much I'm going to get by investing fixed deposit for this 4 years, maturity amount, no visibility. And obviously accounting, you have to punch. So this is the manual. You won't be able to automate the accounting of your uh, your accounting. What are the accountings are there? So already we have, so accounting serve FD creation, FD interest, monthly provision, then FD interest capitalization, which we get at the quarter end, and FD maturity. So all this accounting is not possible to automate in finance. So all this accounting you have to do manual. It means like you need a support system. Support system means you have to maintain one Excel, or you need some other third party tool to manage this complete MIS. Okay. In SAP, there is no solution. And you know, if you want that your financial supply chain management process should be robust, and if you expect all these MIS should be generated from SAP system, then you need a solution. You need a solution where you should have complete visibility of all these details. you know like you would be able to maintain the start date, in date, amount, and system. Based on the rate of interest, system will propose like what is the maturity value of this fixed deposit, and automatically it will propose the accounting for all this. The creation, interest, provision, all these things should happen automatically. So that's why we need a treasury module where you can have the complete visibility of your fixed deposit. Is it clear why we need this treasury module? I'll take the another example. So, like I'm teaching you the business process, like here you have understood like if what is the fixed deposit and what are the informations are required, what are the accounting touch points are there. Now I'll take the another example. I'll take the example of one borrowing. Now borrowings means I normally approach to the bank and I request for the loans. So for the individual, like as an individual, if you go to the bank, then specifically they will ask you, tell me like what kind of loan are you looking for? So you may say, I'm looking for housing loan or I'm looking for some personal loan. And they will, based on your eligibility criteria, they will tell you, yes, you can get the personal loan or you can get the housing loan. So they will talk with you about the individual requirement of your borrowing, right? But with the corporates, with the company, this kind of one-to-one deal doesn't happen. Whenever you go to the bank, so first of all, like you have to, you know, you have to have the kind of bank establish a banking relationship with bank. So you would say like, yes, my bank is Citibank. It means like as a corporate, I deal with Citibank and Citibank is our banker who take care of all my financial requirements. So you need to understand like what kind of financial support bank does to the companies. So normally what happens, like when you talk about your financial need, you will say like, I will create a current account with the bank. And friends, I hope you all know what is current account. Any question, any doubt, what is current account? You can ask me. Okay. So current account means normal, the corporate cannot maintain a saving account. So they maintain a current account where the normal flow of your receipt and payment with bank happens. So here bank will not give you any facility other than receipt and payment on your account. So this you can say normal bank account for a corporate. Then you have OD account. This is called overdraft account. Okay. What is overdraft account? Anybody can tell me?
Loan account.
Basically,
Loan account.
this is not a loan account. What happens?
Overdrawn. What they said.
Overdrawn account. So what happens? Like suppose, because as a corporate, you won't be able to manage your bank wherein you will have the complete visibility of your receipt and payment. So if you take the real-time example, at a given point of time, suppose you take example like I have 100 in my current account, 100 USD in my current account. Okay. And in SAP, you use F110 for your payment to the suppliers. So suppose if you have release a payment of 200. Okay, so this is the payment. Understanding that like you are going to get the collection from customers. So if you have collection from bank, collection from customer is suppose 150. So that's why you have said you have balance of 100 and collection you are expecting from customer to, so you have expected like 250 will be in my bank account, but and based on that you have released the payment of 200. So you are thinking like, still I will have the balance of 50 in my bank account. But friend, suppose collection doesn't happen, what will happen? What is going to happen? If this collection is not happen, then you will have the negative 100 in your bank account. And here either bank can support you like releasing this 200 payment, or they will say like all payment will be dishonored, means they will not release the payment from your account because you doesn't have the balance. So that's why we need a overdraft facility. So here you can say like bank may tell you like I'm giving you 1000 USD OD facility. It means like here whether collection happens or not happen, like here I have the OD facility. Okay, I have the OD facility. It means any given point of time I would be able to use this 1000. And here if you will see like any given a point of time, this is my balance, and here I can easily release this payment of 200. So still I have balance of 900. So now in the OD facility, I have used how much amount? I have used the 100. Okay, I have used the 100, means I have 1000, and now I have it balance of 900. It means I have utilized OD utilization is 100. It means I have to pay the interest on the 100. So this is the second banking. Then you have different type of loan accounts. So you will say I have the term loan. You will say I have a working capital loan. Now guys, you need to understand what is term loan, what is working capital loan. So term loan means the repayment will start after fixed period of time. It means like suppose you have taken loan to set up your factory or set up the machinery. It means you will say the repayment I will do after 5 years. Or you can say depends, like you need some kind of moratorium period of 1 year, 2 years. After that, you can start your repayment. Then you have working capital loan where your installment will keep on going the way like it you take the personal loan or housing loan likewise. And then other type of banking facility would be they will tell you letter of credit, you know because normally what happens, you need this letter of credit or bank guarantee. Letter of credit means suppose if you are going to import some material or purchase some material from the domestic or international, you have to give a kind of support or your payment credibility a statement, you can say like bank will tell you on your behalf like yes, in case when the complete transaction will be performed, bank will release the payment. So that is called the letter of credit. Means I'm giving you a very high level, I'm not going into the actual definition of this. Then bank guarantee. So if you bid for some of the project, if you are going to bid on some of the tenders, then the party will ask you to submit the bank guarantee. So one bank, they will give you so much of different kind of transaction facility. All these things are called the facility. So bank will give you facility. Okay, bank will give you facility by providing all this kind of loans, that is fund based, non fund based, as part of the overall your portfolio. So if you look at the finance module, then you won't be able to manage all these different products and what type of transactions you are managing through all these different products. In finance module, you won't be able to manage. That's why you need a dedicated system wherein you should have the complete visibility. Like suppose if I'm dealing with Citibank, okay, now I'm dealing with Citibank, and Citibank has given suppose this facility, overall facility I have here, they have given, like they would say I'll give you overall facility of 5, suppose 100,000 USD. Okay, for example, now they will what they are going to support you then? They would say in the OD, I will give you 100, loan, term loan, I'm going to give you 500, working capital 200, letter of credit 100, and bank guarantee as a 100. So you can see I have 1000. One thousand 100. So this I'm saying 50, 20, 100, 100. Okay. So here bank would say like this is the $10,000 for the OD facility, $50,000 for the term loan. Likewise, they can give you different facility. Now, if you go to the definition, so this we call fund based, because here actual monetary transaction happens. So this is called fund based facility, and here letter of credit is called non-fund based facility. So bank would say like, yes, this is the 20 is your non-fund based, okay, and here 80 is your fund based. So this complete bifurcation, complete details you would need in your system, and this is possible only in the treasury module. So if I learn this treasury module, I would be able to, implement and do the complete into accounting reporting of my, borrowing. So you can see here, like here, the understanding of the business requirement, what is the business process, and then mapping in the treasury and risk management, how it happens. So this is the very high level, why treasury module is required. What are the information I won't be able to manage in the finance module? Is it clear to everyone?
Yes, Hemant. Yeah.
Okay. So here, if you take any product example, like here we have all these products. So all these products are categories are unique: fixed deposit, deposit at notice. So we will understand one by one in subsequent classes. But like here, if you take any of this product in the finance module, you won't be able to meet the requirement of your accounting and reporting. Somehow, in finance module, you would be able to do the accounting with support from Excel or third-party tool. So suppose if you have treasury as a solution implemented in third-party tool, okay, so it's like some dedicated treasury solution product, then you have to take the download from that tool, and you can do the accounting here. Okay, now coming to the what we will do now. I had a plan, like I was supposed to show you something in SAP system, but did not get the access of this system. So that's why we won't be able to start. So we can start from now. As a base, what we are going to do, let's make a plan.
We can implement also with links, leasing.
Leasing is different. Leasing is a different module, Joseph.
Okay.
So for the leasing solution, like SAP has a module called lease accounting, which is extension of SAP REFX module. Okay. Okay. Now coming to the understanding of treasury and risk management. So we understand like why treasury and risk management. Now let's understand like what is treasury and risk management, and how we can implement this treasury and risk management module, right? So to implement treasury and risk management, you need to understand what are the prerequisites are there. So suppose if you are working as a treasury and risk management, then what are the prerequisites you have? Like directly you can't go and say like, okay, in SAP, I can do the implementation of Treasury and Risk Management. So there are some prerequisites. So first you need to understand what are the prerequisites are there. So first prerequisite is like the basic finance model, means finance and controlling module has to be activated. So if finance and controlling module is not activated, not properly implemented, you won't be able to implement treasury and risk module. Okay, so in the finance, so here the organization structure and chart of account, this is the prerequisite. So at least the base organization structure means, if I say what is the organizational structure, then here you have company code, this global parameter, this 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 this, then your bank accounting. So all these things has to be implemented. Okay, this, and then chart of account, all the GL accounts should be available here. This and in the controlling, so here the cost center, and if there are profit centers, then these two modules has to be activated. This, without this, you won't be able to start work on the treasury and risk management module. So when we will start the configuration in this system, we will use some of the existing company code, or you can copy the existing company code and create a new company code, and where you can implement this treasury and risk management. See, this coming to the what are the functionalities, or overall reporting and accounting you can do from the treasury module. So here, like this on the product get type already I have covered. Like here you have money market, then you have forex, securities, this derivatives. Okay, this on top of that you can manage the parallel accounting. What is this? So suppose you have a reporting requirement of Ind AS, IFRS, in international accounting standard. So you can say the accounting as per all these accounting principle is possible in treasury module. And at a time, like if you have this parallel accounting, means you have multiple ledgers. In finance you have leading and non-leading ledger. So hope like guys you understand what is leading non-leading ledgers. Like, so in SAP finance module we activate different ledger or books of account. So treasury module has a capability to do the accounting as per different accounting standard, and also it support the parallel accounting. Okay, second, it support the hedge accounting. This, if you have hedge accounting applicable, then it support the hedge accounting. And overall, like credit risk, this, so credit risk, it means like you have a credit control in treasury module. So it support the your daily risk management. And then here other functionality you can, if you ask me, like you can this we have covered the accounting, we can do that. Okay, then you can have the correspondence. So suppose if you want to have the correspondence with the bank, it means like you want to send the intimation to the bank or you want to send in, notification to your internal stakeholders management from the treasury modules, you would be able to do that. So correspondence is supported by, treasury. Okay. So this is the, prerequisites and high level functionalities. Coming to the parallel accounting. So in the parallel accounting, already I have said, like if I tell you the more, then what happens in the parallel accounting? So very simple layman language. In if you look at the any company, first is like they would like to meet the reporting requirement of their respective countries. So for example, like I have ABC company, I have ABC company. It is based in India. So based in India. If I talk about my statutory reporting requirement, that is legal statutory reporting requirement, it means I need to report my financial as per Indian accounting standard, means just to provide the financial statement to my Indian government. And that is called one books of accounts. So in SAP, you maintain the books of account, that is called the ledger. So in SAP, like I will have the default ledger. In SAP, it is called the leading ledger. Currently, it is called the leading ledger. So I will just have the default ledger, which is called the, leading ledger. I will activate. It will be by default activated. Okay, but here, since I'm going to do the statutory reporting requirement as per the Indian government, but at the same time, I may require, reporting as per my internal MIS. So for my MIS reporting requirement, I may say, like, I need separate books of account. Okay, separate books of account. So here, if you see, I need two books of account at the same time. Okay, so here I said, like, okay, my leading ledger means default ledger will suffice the requirement of my statutory reporting. But what about the MIS reporting? Okay, so in SAP, the current version of SAP, whether it is SAP ECC or SAP S/4HANA, they have given a facility to maintain multiple books of accounts. Okay, so I would be able to maintain n number of books of account in SAP. So whatever transaction you will post, it will update. Like suppose this is my book L1 in my one books of accounts. This is L2 in my another books of accounts. So whatever transaction we post, it will update to both the books. Okay, both the ledger. And also SAP has given functionality, like here you can have the specific ledger specific posting, when books of account specific posting. Okay, it means like you can post some specific transaction which is relevant or applicable only to the particular book. So that functionality is also available. So it means at a given point of time, you are able to maintain multiple books. That is called the parallel accounting. So here I am able to maintain the multiple books of account. In the EAP module, current.
What sets ZaranTech apart in SAP corporate training? It's our unique blend of expertise and innovation. We offer customized courses tailored to each client's needs, ensuring relevant, targeted learning. Our vast trainer database brings you wisdom from the best in the field. Need resources? Access our extensive training material repository anytime. We are all about measurable results, providing detailed student metrics to track progress. And we don't just teach, we build community. Join our thriving social media network, connecting learners beyond boundaries. With ZaranTech, you are not just training, you are transforming your SAP expertise.
The payment happens, you generate the payment file, upload in the bank, and do the approval. But in the FSCM module, how we can do that, right?
Yes.
This is your question. So for that, we have bank communication module. So in SAP finance AP, you process the payment normally, and the approval happens in the bank portal. So you generate the file, upload in the banking, and upload that. So if you want to optimize the process, you can implement FSCM BCM. So that is called the bank communication management. Okay, this is the module. So what happens, like this AP where you use the F110 transaction to make a payment. So this transaction, it will remain as it is. So payment will happen from here, but like the payment will not directly go to the bank. First, the payment will be grouped in different batch. So system will generate different batch of the payment, and the approval will happen within this module. So the person who is authorized to approve the payment of the supplier, he will do that approval in the BCM module. And once all the approval has happened, you can directly, like through the interface, you can send the payment file to the bank, and automatically once you send this file, it will get uploaded in the bank, and automatically your account will be from your account the payment will be released. So this is the module which will help you to do the automation of your payment.
Coming to the how does we have discussed about the basic understanding, like why treasury module is required. So we have discussed this. Now to start, like how does this module works, we need to start the example here. So for the fixed deposit, we have discussed, like, okay, these are the different information we need from the SAP system. So now we need to understand, like, how system will be able to give us all this information from system, from SAP, from the Treasury and Risk Management. Okay, so as a process here, the component means how it is going to be configured. Let me start. So I'll talk 10 minutes on that, and in session we will get the SAP as well. So we can start the understanding how we do the configuration in the system, how does the end-to-end process would work. Okay, so first of all, like if we talk about this fixed deposit requirement, then here we can see, like, we have bank is involved. Okay, so I have different banks where I do the fixed deposits. So in the treasury solution, okay, in the treasury solution, this is called the business partner. So if you are working on the Treasury and Risk Management module, then all these different banks, or like with whom you are doing the treasury related transactions, all those are called the business partners. So if you have started working on SAP S/4HANA latest version, then your customers, suppliers are also called the business partner. But if you are still working on SAP ECC, or that's the older version, then the treasury suppliers or customers, you can say, like, those are called the business partner here. So we need to know the configuration of my business partner. Okay, how we can set up the business partner, because here the setting of the master data, okay, is very, very important. So here this is the master data setup we have to understand. Then here you can see, like, we have the fixed deposit amount, we have the interest, amount, we have interest rate, then overall this accounting. So accounting related to fixed deposit. So if I talk about the accounting entry, then you understand, like here, when I create the fixed deposit with the bank, we do some accounting entry. So can anyone tell me, like, when I create the fixed deposit, what is the accounting entry gets created in SAP system, or normally what accounting you do? Can anyone tell me the accounting? Which account will be debit, which account will be credit? Anyone?
Can you repeat the question, please? Sorry.
So I want to know the accounting entry of fixed deposit creation. So I'll tell you. When I create a fixed deposit, we say fixed deposit account. Sorry, fixed
There's normally bank and clearing account, right?
fixed deposit account, it will debit, and your bank account credit. So this is the accounting entry will be created. Then when I do the month end provision of the fixed, interest, so that time there will be accounting entry. So what is that accounting entry? So, accounting entry of the provision is like, interest accrued on and fixed deposit, this account debit, and interest on fixed deposit, this is income credit. So here, this is my balance sheet account, this is my balance sheet account, this is my balance sheet account, this is my P&L account. Okay. And then I have interest capitalization, means when bank will, credit the interest to your account. So what is the accounting entry? So here, since bank will give you money only at that time of maturity, so here the accounting will be my fixed deposit, this account will get debit, and here interest income or interest on FD will be credit. And if you may say, like, here also a month you have credited interest on FD, and here also you are crediting interest, it means it will be double. So no. So this provision, it get reversed in next month. Okay. So that's why there will be no impact. And when maturity of the fixed deposit happens, so maturity when means, so maturity means you will get the money in your bank account, it will debit, and credit will be your. See, so now I got the maturity of money in my bank account. This PNN. So this is the accounting. And as a treasury consultant, you have to be very strong in the accounting as well. And friends, as part of this training session, I will walk you through about the accounting of all the products as well. I will share the document on the accounting treatment of all these, products. And this is very important. So as a treasury consultant, what are the expectation will be from you? You need to understand the process, you need to understand the accounting, you need to understand the configuration in the SAP system, and you should be able to do the transaction at a end user, which we will cover as part of our training session. Okay, is it clear? Now here I'm in the treasury module. What are the important objects are there? So here I mentioned the business partner. Then in the treasury, all this accounting means you need GL accounts for all this. And these are the called flow. So GL account, that is the finance, but these are called flow type. Okay. These are called flow type, like fixed deposit creation, So in the treasury module, there will be a flow type which will um, which will generate this accounting entry. Likewise, there will be different flow type for fixed deposit, interest provision, interest capitalization, and FD maturity. And by doing the end-to-end configuration in this system, like you would be able to maintain and get the accounting and reporting from the module. Okay, we will start more detailed understanding of how we can set up the treasury solution in SAP, and we will also learn how we can configure fixed deposit in treasury module.